Welcome to the Board of Directors agenda meeting for August the 25th. This is our opportunity to review the agenda for our formal board meeting that will be held on September the 1st. We would also like to welcome Directors Hendricks, Richardson, Webb, Fortson, Vice Mayor Wyrick, Hines, and Peck, who are joining us via video conferencing. We'll start today with a presentation. I want to first take time to recognize Director Dr. Dean Compuris, who wanted to ensure, and glad he did, while we take advantage of today's date of August the 25th, the day before August 26th, which is the recognition of the centennial of women's suffrage in the 19th Amendment. We'll have a presentation by our creative advisor and Mr. Scott Carter. Mr. Carter, Creative Economy Advisor, right?
Well, thank you, Mayor and City Directors and City Manager, City Clerk. You know, as a white male talking about the 19th Amendment, I'm trying my best not to lapse into mansplaining. I am certainly not here to speak on behalf of women, but to speak in honor of women. A little while, the Mayor will do a proclamation, which will summarize the 19th Amendment. I do not want to steal his thunder, but as the city historian, I was asked to give a few details about the 19th Amendment. Last year, when we were working on the dedication of the Every Word We Utter sculpture, which focuses on the 19th Amendment, there was a lot of discussion about words, and that makes sense. An amendment is words. Here's the complete text of the 19th Amendment. The right of citizens of the United States to vote shall not be denied or abridged by the United States or by any state on account of sex. Congress shall have the power to enforce this article by appropriate legislation. In discussing the 19th Amendment, we knew that we did not need to say that women were given the right to vote or that they earned the right to vote as if it was a privilege they had to jump through hoops. Instead, what it was that they had previously been denied the right to vote. What the 19th Amendment did was to remove those barriers which forbid them the ability to vote. In Arkansas, women had been able to vote in the Democratic primaries beginning in 1918. I should stress that it was white women, since African Americans were forbidden from voting in party primaries in Arkansas at the time. The first attempt at ensuring women could vote in Arkansas had been introduced in 1868 as part of the Arkansas Constitutional Convention, and no surprise, it was not adopted. The Arkansas legislature took up the proposed U.S. constitutional amendment in a special session called by Governor Charles Bruff, whose wife Anne was a leader of the women's suffrage movement in the state. The amendment was approved 74-15 on July 28, 1919. Now, as the largest city in and the capital city of Arkansas, Little Rock women played a significant role in the adoption of women's suffrage in Arkansas and nationally. In fact, both the previous and current Little Rock City Hall buildings played host to many meetings on women's suffrage. Some of the Little Rock leaders were Mary Burt Brooks and her sister-in-law, Dr. Ida Jo Brooks, Eliza Dodge, Mary Loughborough, Charlotte Stevens, Josephine Pankey, sisters Mary Fletcher Drennan and Adolphine Fletcher Terry, and Gertrude Watkins. Several of them held national leadership positions, including Watkins and Drennan. And I want to note that I couldn't find photos of all of them because, well, it is sometimes hard to find photos of women from the late 1800s and early 1900s, though it was been very easy to find photos of men. As mentioned before, the Every Word We Utter sculpture pays tribute to several generations of women's suffrage leaders. In addition to the national leaders, Elizabeth Cady Stanton, Susan B. Anthony, Sojourner Truth, Harriet Stanton Blatch, Alice Paul, and Ida B. Wells, it also features two Arkansas leaders, Josephine Miller Brown and Bernie Babcock. The sculpture is based on the concept of a drop of water not only causing ripples, but also rising up again after its impact with the surface. The women are presented in a series of levels, each building on the work done by previous generations. And incidentally, I just want to mention that Ida B. Wells was recognized earlier this year with a posthumous Pulitzer Prize not only for her work in the women's suffrage movement, but also her crusades for racial equality, as well as economic and educational equity, issues that still resonate with us today. Just as it took decades of work, as everyone in this room knows, the passage of the 19th Amendment was not the end of the story, not by a long shot. Until the Voting Rights Act, there were still many state laws which threw up barriers for voting. And since the passage of that law, new obstacles have arisen. Equal pay for equal work, as well as equal access to opportunities, continue to be challenges for many. So in a commemoration of the centennial of the 19th Amendment, it is not just an opportunity to rest on laurels, but it is a chance to pay tribute to the hard work of those generations of early leaders, and it acknowledges that the 19th Amendment did provide a platform in which future efforts have been and will continue to be built. Thank you.
Thank you so much, Scott. We really do appreciate you giving the historical perspective. I'll now read our proclamation that will go in effect tomorrow, the actual day of this. Whereas in 1878, a bill was introduced into Congress which would have prevented states from denying women the ability to vote. While that bill failed, as did many subsequent efforts, on May 21st, 1919, the U.S. House of Representatives passed the text of a proposed constitutional amendment, followed by Senate approval on June 4th, 1919. And whereas Illinois became the first of 36 required states to adopt the amendment, with Arkansas being the 12th state to adopt it on July 28, 1919, and whereas Tennessee became the 36th state to adopt the amendment on August 18, 1920, which then officially became the 19th Amendment to the United States Constitution on August 26, 1920. And whereas the 19th Amendment was the culmination of over 70 years of hard work by women such as Susan B. Anthony, Elizabeth Cady Stanton, Sojourner Truth, Harriet Stanton Blatch, Alice Paul, Ida B. Wells, and locally women such as Josephine Miller Brown, Bernie Babcock, Dr. Ida Jo Brooks, Mary Fletcher Drennan, Josephine Pankey, Charlotte Stevens, and Alphine Fletcher Terry, and many others. And whereas since the passage of the 19th Amendment, Little Rock has had scores of women serve in leadership positions, both elected and appointed. Among these are the following who have served on the City Council and City Board: Carolyn Connor, Alma Benberg, Mildred Craig, Lucy Dixon, Myra Jones, Meredith Catlett, Linda Joyce, Gloria Wilson, Johnny Pugh, Genevieve Stewart, Barbara Graves, and Stacy Hurst, as well as current members, Directors Joan Adcock, Irma Hendricks, Kathy Peck, Kathy Webb, Doris Wright, and Vice Mayor B.J. Wyrick, with a special mention of Lottie Shackelford serving as Little Rock's first female mayor, and Sharon Priest serving as the second female mayor. And whereas in October 2019, Little Rock dedicated Jane DeDecker's sculpture, Every Word We Utter, and the 19th Amendment Plaza in the Riverfront Park's Vogel Schwartz Sculpture Garden to honor U.S. and Arkansas leaders of the women's suffrage movement. And whereas Wednesday, August 26, 2020 will mark the centennial of the 19th Amendment, ensuring that federal, state, and local laws cannot restrict people from voting on the basis of their gender. And whereas in the conjunction with the 19th Amendment centennial, the Little Rock Convention and Visitors Bureau is lighting the downtown bridges in the colors of purple, yellow, and white, the colors of the American women's suffrage movement, on August 26, 2020, as a part of the Forward Into Light campaign coordinated by the National Women's Suffrage Centennial Commission and the National Endowment for the Arts. Now, therefore, I, Frank Scott Jr., Mayor of the City of Little Rock, Arkansas, do hereby proclaim August 26, 2020 as the 19th Amendment Centennial Day, and encourage Little Rock residents to visit the 19th Amendment Plaza in the Vogel Schwartz Sculpture Garden and to pay tribute to the thousands of women who have fought for the eventual passage of the 19th Amendment. Thank you. We'll now transition, unless any of our directors would like to make any comments at all. Seeing none, we'll now move towards our 2021 healthcare update. Stacy, Director Stacy Witherell.
Thank you. Thank you, Mayor Scott, Board of Directors. Last time we were Here we were discussing our current state regarding the health care that we provide for our city employees and retirees. And we told you at that time that we would be back because we were anxiously awaiting our renewal from our current provider, United Healthcare, and we've gotten that renewal. It came in at a 9%, and then Stevens went back to them and had them reduce it, or negotiated with them, and it was reduced to a 7.5% renewal rate for 2021 with the holiday premium holiday for December of this year. And Tom Keynes from Stevens is present, and he will go through a presentation for you. With this new information on the renewal, it does seem to lead into further questions about how we want to proceed with the health care for our employees, because when we came to you last fall regarding the decision whether we should stay fully insured versus going into a self-insured model of providing health care, we felt like we were certain that we were on a path going to a self-insured model with a clinically integrated network. And now with this renewal number and the estimates of what our costs will be overall, it does lead to another level of questions about what would be the right action for the city at this time. So with that teaser, I'm going to introduce Tom Kane from Stevens Inc. Thank you.
Thank you, Stacy. Mayor Scott, members of the board. I think you have before you the actual presentation or the material that I'm going to review. I'm going to start with just a little bit on the health claims trend, and it's important to understand that these numbers include the outside agencies that are insured under the plan of the City of Little Rock, as reported by United Healthcare. So we can see the last 12 months through May 2020, the city had paid premium of a little over $16 million, with incurred claims of $15 million. That's an incurred claim loss ratio of 92.2%. Now, we were here the last time, we had claims through April, and it was trending at 93.9, so it has come down. This is with an average enrollment of 2,176 employees. Again, that does include the outside agencies. We had 7 claimants who exceeded $200,000 during this time period, with the largest at $968,000. The next couple of points illustrate something that has occurred over the last several months that is being driven by the pandemic, the COVID-19 pandemic. And we can see in April, our paid premium was $1,452,940 versus claims of $1,173,655. That represents an 80.8% loss ratio. And then in May, we had premium of $1,306,000 versus claims of a little over $1 million for an incurred claim ratio of 80.1. So we've seen a trend really for some of our groups in March, certainly April and May. People quit going to the doctor. People quit going to the hospital. People canceled or postponed elective procedures, and so there was a significant reduction in demand for healthcare services during this time, which resulted in very favorable paid loss ratios and cash surpluses on behalf of all of the insurance companies. You can see our pharmacy claims continued to remain pretty consistent through this time period. On the next page outlines the renewal that Stacy just described. They came to us initially with a 9% renewal, but out of the blue, something we did not expect, caught totally by surprise. They offered a premium holiday for the month of December. And that's both city money and employee money. So that's the total gross premiums paid to United Healthcare for the month of December. We went back to him and said, that's great, thank you very much, but our clients have the expectation that we will never accept the initial offer, and so we want it to be better, and they came back with 7.5%. So we projected, and again on this page, please note at the top in red, this excludes the outside agencies. So this is just applicable to the City of Little Rock employees, 1,950 employees. So we projected the 2020 premiums paid for 2020 based on 1,950 employees and premiums per employee per year of $7,290 to be $14,215,500. That is an estimate. It should come close to that, but that is just an estimate. So if the enrollment stays consistent throughout the balance of the year, we should come close to that number. If I apply a 7.5% renewal increase to that, that increases the total gross premium to the City of Little Rock, the employees and their dependents, of $15,281,663. So I went back and estimated what would that December premium holiday look like based on the projected 2020 premiums, and 1/12 of that's pretty simple math, $1,184,625. In other words, United is forgiving that on behalf of the City of Little Rock for the month of December. And so when I net that out of the projected 2021 premiums with the 7.5% increase, we come to a net gross premium cost of $14,097,038. That is actually less than what the city is projected to pay in 2020. Again, this caught us completely off guard. We did not see this coming. In my 40-year career, I have not seen a carrier make this big of a move. So, as Stacy said, this kind of changes some of the things that we were looking at. And before I answer questions, I would ask if we could go to the next page. We were fully prepared to come here today and make a strong recommendation for the city to go self-funded and to contract with the Arkansas Health Network as a clinically integrated network. And you can see our projected first-year self-funded cost were very much in line with a 7.5% renewal from United Healthcare. We estimate fixed costs, which includes administration, including the fees charged by Arkansas Health Network, reinsurance premiums to be a little over $3 million. Based on history, projected savings on pharmacy due to our work with our pharmacy practice, we expect medical pharmacy claims to be approximately $12 million for a total expected first-year cost of a little over $15 million. If you look back on the previous page, you would see that a 7.5% increase on current under item number 2 would be projected at $15,281,000. So our total first-year expected cost under a self-funded plan would have come in under what a renewal at 7.5% would have projected. Based on the reinsurance contract and the aggregate attachment point, the maximum first-year cost could vary, but we felt confident that our expected first-year costs were accurate. But then we had to take into account the premium holiday from United Healthcare. So with that, I will open to questions.
Director Compuris.
Hi, Tom.
Director Compuris.
Let me go through this for a minute, and I, this all sounds real good that we're getting something free, but I think there are a lot of parts of this that...
Director Compuris, before you start, my understanding is you do not own a 10% or greater interest in United Healthcare or anything else, even though as a physician you get paid insurance by a whole bunch of insurance companies.
Thank you for bringing that up.
There is no conflict.
I'm on just about any panel there is, so I thank you for... the mayor was very nice to let me work during the winter on the task force, and on the COVID, and it's like most things in my life, I have a little knowledge, so I'm dangerous, so you can correct me anytime you want on what I'm doing wrong and not saying correctly. There are some assumptions in here I think that everybody on the board needs to know. It is a great thing to think that we're going to get something back to keep our health care costs basically the same for a year. But let me point out a couple of things. First of all, if you look at the rate, especially in the months the pandemic really hit, every month that, and just take May, where we had an 80.1% rate where we were paying premiums and the amount we were paying out was under that amount of money. So United was pocketing and making a profit off that 20%. They were putting it on their books. And so one of the assumptions the insurance companies make is that once things get better, then there's going to be this rush of people and all that's going to be made up. But it's been pretty well established now that that doesn't happen. If you make widgets, you can only make widgets as much to your capacity as you have. So if all the hospitals in Arkansas have, or Central Arkansas, that's what we're really talking about, have X capacity, if you can't exceed that capacity. And unfortunately what happened during this period of time is we've had a number of people who have not had care, who have either died or have some other problem, so they're not, it's not available to them. So that money that has gone into this has been banked by United, and they're holding that money. Now, could you or Tom go into what happens when an insurance company makes an excess profit at the end of the year according to the Affordable Care Act?
Yes, sir. Under the Affordable Care Act, there's a provision known as the minimum loss ratio. And under the minimum loss ratio for large groups, which in Arkansas is defined as groups exceeding 50 enrolled employees, the insurance company can only retain 15% of premiums paid. Now, there's a lot of things that can be included in that or excluded from that, but that's the basic idea of the law. So at the end of the year, United Healthcare and Blue Cross insurance companies, and it's not client-specific, so it's not specific to the city of Little Rock or any other employer, they take all the large groups, and for instance, the state of Arkansas, and then they look at the premiums they received in versus the claim payments they made out. And if they did not pay out at least 85% of the premium they received, again, they're only allowed to keep 15% for cost of doing business, they have to return that money to those policyholders as a premium refund. And it is calculated as a pro rata share of the total premium paid in.
So by them giving us a pass in December, this may represent to them what they would have to give back anyway. And so what they're really, to me, they're doing, and they're smart. I mean, they're, you know, we look at the law, the ratios when it gets to exactly the amount we paid out and what we spend. We never calculate in that they build in a profit in the whole process. So they're making money. If we paid out $1 million and we billed $1 million, they're still making money off that. So when we look at this amount of money, they're making money to start with, and then they have to dilute down to that 15%. And by giving this back to us, it's probably something that we would have gotten some of this back anyway. Is that right?
Potentially, yes, sir.
And I don't expect, based on what's happened so far, that our ratios are going to be that much different moving forward. Now, Stacy may know better, or you may know better, but my inclination is that at the end of the year, they're not gonna get up to 85%. So they're giving us this money, and what that does, I think, is it gets it off their books. Isn't that correct?
I would say that that is correct, that they're not wanting to carry that money forward into 2021.
So basically, it looks good, it feels good, but the thing that bothers me about this is that when they do this, let's just say in 2021, we come back and there's another problem and we have to go back to United. They're going to start bargaining at 7.5%. So they're giving this back. It looks like we're getting something free for a year, but come this time next year, they're going to say the baseline is 7.5% above what it is right now. Is that right?
That's correct.
So we're going to get hit double a year from now if we still have to go to a commercial insurance company. My second problem with all this is that it's the same thing I said last year. We don't have, as a group, the healthiest group of employees in the world. And the problem that I brought up last year, and the problem I'm going to bring up again, is that what we're really doing is that we're acting as we're buying a fiduciary to pay claims, and that's it. We're not doing anything to help our employees get healthier because they all have different doctors. They're not in the same network. They don't have anything set up to do it. Isn't that right?
You could make the case that that is true, that there's not much being done to manage the risk in the population.
Well, I mean, a year ago we talked about this, and the plan was to try to do something to supplement the United contract. And to my knowledge, we never did that. Is that right?
There are programs embedded in the health plan that address chronic disease and other conditions within the population. Director Compiers, the issue with a fully insured plan has always been low engagement in those programs.
Well, again, I think that it would be hard for us with all the uncertainties not to take this. But I think we need to understand that this is not a gift. They have to get this off their books so they don't have to pay it back later on. This is a situation where they're going to peg us at 7.5% if we have to use them again next year. And this is a plan that doesn't do anything for another year to help make our people better. And I you know, it is hard with the financial situations we're in for the mayor and Bruce to come back and say we're not going to accept this offer. But it looks to me like that I would look real hard to make sure that this is not a gift that is going to bite us later on in what happens to us. And we again are abandoning, I think, our responsibility to use our insurance to try to help our employees get better. And that's a real problem. I mean, you said there's, 8 people that spent
Yeah, we had 7 claimants that exceeded $200,000.
Yeah, 7 claims that were almost $1 million. So we have to realize, I think, our responsibility to our employees and what we're doing, and we're not doing the right thing by them. And I just think that this is, it sounds good, it looks good, it will certainly help us for 21 to do this, but it is, I think people need to understand that it's not an altruistic gift from United just because they think we're nice guys and they're going to do this. They're doing it to get their money off their books so it doesn't look bad in the end of the year, so it lowers their ratio, so they're going to have to give it to somebody. And what it does is it locks us into that company. I would use another word, but I don't want to use that. But it is a real hard system, and I would urge you and the mayor and Stacy to look at this in a more holistic way and say, are we really doing the right thing by the people that we're supposed to be helping? And that's all.
Director Hendricks, and then after Director Hendricks, Director Hines.
Thank you. Gentleman that's speaking.
Yes, ma'am. Director Hendricks.
What he has brought before us. Can you hear me?
Yes, ma'am.
Can you hear me?
Yes, ma'am.
Okay, I want to ask the gentleman that did speak. What he has brought before us, is this the best that they can offer?
The question,
Thinking in terms of what David said,
yes, ma'am.
compared to what David said.
So, Mr. Kane, I'm going to interpret for you, Director Hendricks, because it's kind of a little, the volume.
No, I'm not putting nobody to speak for me. Okay, let me say it again.
Yes, ma'am.
I want to know, this gentleman that has presented this program, was he prepared to do what he's doing in opposed to what Gene is saying that he should do? It may be too heavy for him to answer, but that's my question.
Yes, ma'am. Mr. Kane?
Yes, we represent and act on behalf of the city of Little Rock, your employees and their dependents. So we feel we have done the best that we can in this situation, in a pandemic, to get the best offer we can for the city of Little Rock.
Thank you, Mr. Kane. Director Hines?
Thank you. And this may be a question for Director Contreras and Tom. Dean, I fully get where you're going with this. We've got a situation that's bird in hand. And the other issue is strategically and holistically, I get where the clinically integrated network wants to go. I think, Tom, from my understanding, we've had a lot of folks who didn't seek health care through the pandemic. My fear is that we're headed for a really bad claims year next year. And I think the question is, if we have bird in hand, we stick with United through this next year. If we have a bad claims year because of all of the folks who didn't seek care, then we're probably ahead. But I think long term, the clinically integrated network and trying to improve the health of our population is where I agree with Dean, where we need to go. I think the question is whether we do it this year or wait till next year to do it. And I think that's kind of the several $1 million question. How much clinically integrated network is fairly new? So between Dean and Tom, how much track record do we have where they've used it in populations our size or bigger, and what was the net effect, since it's a relatively new concept? I think to me is kind of some more information I need.
Director Hines, the Arkansas Health Network has been serving the employees of CHI Arkansas for several years. They did a Medicare pilot program as well. They've also been working with Anthony Timberlands for a number of years. And most recently, some of my associates are working with the Arkansas Health Network and the employees of Arkansas Children's Hospital. The results so far have been very promising. You need to understand it does take a bit of time from when you implement one of these programs to where you actually get enough engagement that you start changing behavior and improving outcomes. But what we've seen so far is that it's very positive.
I'm all for hearing that it's positive, but I'd like to see some hard numbers and data with the companies improved. I mean, percentage improvements, and I understand that behavior takes time to change, but if they've been deployed for 2 to 3 years, I know that Baptist Health went through a program several years ago, and I think what I would like to see is what are the hard data, what's the best and worst between the places that have been employed, not only within the state, but outside the state, where we've got some track record to kind of gauge, because that's the kind of math we need to add to our calculus to get to the answer we're seeking. And I'm with Dean that I agree that the concept in a clinically integrated network is, but what's that incremental change over time, and has it been deployed long enough in enough places that we actually have real data to make a decision on instead of just going from a feeling? Because I know that the insurance companies and the actuaries are using hard data to run the numbers to get to where they're at, and they're making a mathematical calculation on what they need. And that's why we're seeing, you know, the rate increases we're seeing, which are still not sustainable. I mean, I'd love to be able to go to my customers every year and say, I need a 9 or a 7.5% increase. It just doesn't happen because of competitive pressures. But, and that's something I think that I would like to see some information on that. It doesn't have to be given to us today, but that's the kind of info I'm looking for to try to help guide our decision. And I think really it's a question of timing, Dean, on do we do it this year? Do we keep that gun holstered with the bullets in it to see? And my fear is all of this delayed care through the pandemic, what's that going to mean? Because we all know that people have chronic health conditions. It can take months to a year before those show themselves at the clinic and our claims ratio starts going up. I think that's my biggest concern, is that just because people don't go get care doesn't mean they're not sick. So.
Agreed.
Director Wright, and then Vice Mayor Wyrick after Director Wright.
I guess this is for Dean. I agree with your assessment of this. To your knowledge, are there any models out there that are being implemented that would help our employees get healthier? Is there anything is there anything anybody is doing that has proven successful?
Not, if you have a clinically integrated network, you have a insurance company that is the fiduciary of the money. What happens with a clinically integrated network? Right now, the panel in Central Arkansas is basically any physician that you'd want to see. So when you take a clinically integrated network, you say you shrink the panel down. And when you shrink the panel down, you can then have better control on cost. And you have better control on if I'm seeing 2 patients, Frank's seeing 2 patients, you're seeing 2 patients, Cappy's seeing 10 patients. Then if you're trying to monitor everybody, you've got to go to all these different places. If you've got a clinically integrated network, Cappy may be seeing 20 and you're seeing 10. So you just have to go to those places, and those physicians are tuned in to trying to take care of longevity and take care of and change behaviors. So that's the beauty of the network. That's the reason that it works. And what you have to make sure of is that you have a network that's broad enough that gets all the needs taken care of, but small enough that you can take care of the patients. And my problem that I said a year ago, and I'm saying right now, is we don't have, as a general group, a group of very healthy people that we take care of. And I think that at least one of the responsibilities I think we have as board members is to do something to try to give them a better opportunity to have longevity. Selfishly, that also, for us, over some period of time, as Lance said, you change behaviors and it lowers the cost of doing medicine. And I think that also, as Stacy said and Tom has said, we're getting this great gift. We're going to have a lot of uncertainties in January, in November and December when we talked about the budget. But I'll have to wonder if there's not some way that we start at least on the side doing some sort of program to start taking care of our employees. And that's the problem. It is the uncertainty of right now, I disagree with Lance. I don't think that you're going to see this huge amount of new claims coming in January, February, and March because it hadn't happened now. I mean, Bruce Murphy at the Heart Hospital has got some great statistics on that he's not seen this big increase. Children's Hospital, even though people are coming back to the hospital, their emergency room is still 50% down from where it was before. So all of these big predictions of that you're going to see this wave of people has not occurred. And unfortunately, the reason it hadn't occurred is people didn't get the care they needed and they're not here anymore. And there's some great statistics that more people probably died from the COVID epidemic and pandemic from non-COVID reasons than COVID reasons, which is a real shame. And that's the reason that the mayor got the task force together and the reason we've tried to do all these things. And it's a real dilemma for us, but I don't think that, I think that we have to go into this with our eyes open of what we're doing. And we're getting money from United because they've got to get it off their books. I mean, that's it.
Okay, I can understand that, but I've heard you say something similar for several years now, not just last year. And if we need to be moving in that direction in a more intentional manner, then I think we need to do that, because let this pandemic be what propels us to make a change, because we have been, even though the price has consistently gone up every year, I've been on this board, we consistently come up with the money because we have to, but we never make that move because there's always something that.
Doris, I agree with you completely, and I think that money is what we have to look at first. But my biggest concern is this will be another year that the person with high blood pressure doesn't get counseled well enough. The people with diabetes don't get counseled enough. The people that are overweight don't go into a good program where they lose weight. And if you take, I can promise you, if you go to some of our departments and look at the people in the department, diabetes, hypertension, and overweight covers a large number of them. And that's not being mean, it's just a fact of life. If that's what, and sometime or another we have to say it's our responsibility to try to take care of that too. So I think that the mayor and Bruce and Stacy are doing a good job, and Tom's giving them good advice on what to do. But I don't want people to think that this is just a free gift, that United is just being this altruistic big company, and that they're not making a lot of money, because they're making a boatload of money.
Trust me, I know that. Nobody gives away $1 million without it being for a reason. Thank you.
Thank you, Director Wright. Vice Mayor Wyrick. Then after Vice Mayor Wyrick, it will then be Director Fortson.
Thank you, Mayor. I obviously am not an expert in insurance. I'm thankful that Dean has been involved in this and has been able to explain to us what his thoughts are and what he's seeing. When I don't have a copy of the numbers in front of me that Tom discussed, but I saw the $15,281,663 was our first year cost. And then I saw another number that was our maximum of $18,023,939. So we're talking about that because of COVID, our numbers have been down or better. And then we're worried about, what happens next year. Dean is convinced that we're not going to see a big increase. But how do we number-wise have 15 million and then we have a maximum of 18 million? Could that be those numbers of people that are not going to the doctors, not doing elective surgeries or major surgeries, and then we're hit with the 18 million our first year? How would we get from 15 million, which is we're saying is our first year cost, and we get to the 18 million?
So Tom, if you would explain how the clinically integrated network works from a minimum maximum standpoint. I believe that's the question from Vice Mayor Wyrick.
Yes, it is. Thank you.
Vice Mayor Wyrick, Under a self-funded plan, employers purchase reinsurance to protect them against catastrophic losses. There is what we call specific reinsurance, which protects the plan from individual catastrophic loss. Then there is what we call the aggregate, where we take everybody, all the employees, all the dependents that are covered under the city's health plan, and we add up all their claims. And if an actuary looks at that, and based on history, demographics, plan design, zip code, they estimate what expected claims are going to be. The reinsurance contract attaches what we call the aggregate attachment point, typically at 125% of that number. And so that difference between 15 million and 18 million represents that corridor in the reinsurance contract under the aggregate clause that states the aggregate will attach when the claims exceed 125% of expected. Now, that is really doesn't, I have not seen a employer penetrate the aggregate attachment point in many, many, many years. It's not to say it couldn't happen, but that is there to contractually protect the city from a catastrophic losses across the whole population. We really do think that the number of expected is very accurate, and that's what we expect. But it is important to understand, and I appreciate you pointing that out, that there is that additional risk any employer is going to accept to be self-funded. I hope that answers the question.
Yeah, it does. And, you know, I have some friends and know of some situations where, you know, they probably need to go to the hospital or need help, but if they go to the hospital, then they're alone. They have no family members that are able to come with them. You know, so people are maybe putting off things that they should take care of. And so, you know, I'm fearful that next year we might, if things loosen up, if things get better, that we might see that increase. And so I needed to understand how we got from 15 to 18 if we went to the self-insured model. And I appreciate the explanation. Thank you.
Thank you, Vice Mayor Wyrick. Director Fortson.
Tom, from a historical perspective, every time you have examined moving from a full coverage private carrier to some form of self-insured, normally the self-insured pro forma has been more than the quoted premium, and there's been some differential in each year. Is that a correct memory?
Yes, sir. I would say that's a fair statement to make.
And carrying it further, in that competitive world, trying to foretell the future, is that likely to be the occasion this year, next year, 3 years down the road when you compare a company quote with a self-funded model with the provisions for the reinsurance and everything based upon both of you using the same loss experience?
It's difficult to predict what's going to happen in the future, especially coming out of this pandemic. I would think that the insurance carriers will be less likely to subsidize a high-profile account like the City of Little Rock, and so my gut tells me that it's not going to be the same as it's been in the past.
Well, I recognize predicting the future is impossible, and both of us are making assumptions here, but looking at the likelihood going forward, changes in healthcare, changes in administration of claims, possible legislative changes, even though it means more dollars right now, and there's this nice little Christmas present dangling out there for December. As I listened to your presentation, I think absent that present, your recommendation was this was a good time for us to seriously go into the clinically integrated network and consider the self-insurance model.
Yes, sir. As I said earlier, I was prepared to come here today and make a very strong recommendation to do as you just described.
So I guess really our decision and the the horns of the dilemma we're on is that if the benefits are in the type of wellness program that Dr. Compuris has mentioned and in the clinically integrated network moving forward and in that kind of administration and care for our employees, then is this 1 month incentive sufficient to say that it outweighs the benefit we would get by making the other move at this time?
That's not my decision to make, Director.
No, I recognize. I guess I was just trying to summarize. Does that summarize the question we're dealing with?
I think that's a good summary.
Yes, Director Fortson, that's, I think you are very well suited in that answer and that response. I think it's really a matter of, it's not a matter of if, but when we move to a clinically integrated network. When we're in these financial times of uncertainty, I think we all started January 2020 with the full intention of moving towards a clinically integrated network, understanding what the numbers would be, and we're preparing for to build the reserves. And quite frankly, if you remember, we all made a decision to cut the budget amid the COVID-19 financial impacts of revenue reduction due to facilities of the like that were shut down. Part of that $5 million budget cut would utilize a $1 million contingent that we had saved from last year when we created the surplus. And so that $1 million contingency helped with that $5 million budget cut that we experienced April 5th that actually has prepared us to be somewhat towards the good amid a lot of the reductions that we've seen due to revenue of closed facilities and operations has put us in a good standpoint. The fact of the matter is, when you move to a clinically integrated network, what hasn't been shared yet in grave detail, but we've shared this last year, is that we have to come to the table with a $2 million reserve, in addition to understanding that in a clinically integrated network, if my math is a little bit right, somewhere we start out with a minimum of $15 million, which is somewhere close to, I think we pay right now, not including employees, $11,256,000 a part of our budget. And so when you take into that net effect, we're increasing our budget around around $3 million, really $4 million in our budget for 21 to prepare for the clinically integrated network, really making those front-end investments with the understanding that worst case scenario that we could expend up to $18 million. And so when we're really focusing on the financing and really trying to predict the future when it's hard in the middle of COVID-19, just like any year, things can happen. We're talking about a net effect of having $2 million in reserve plus a budget increase of another $4 million that we're not necessarily factoring in. And when you take into account what Mr. Kane is proposing, it's still, even when you take into that account, a $2 or $3 million difference, even with the 7.5 increase. And so I think that's the reason why Mr. Kane is proposing that we go this route from a financially prudent standpoint. But I think we can all agree this is not a gift. We're grateful to have Director Dean Compuris to really lay out those things. One of the things you should know that Stacy, I've asked Stacy to ask Mr. Kane. I know he's working on this information, and it kind of begs to, it points to some of the things that Director Hines has talked to and in Director Compuris, is that we know there are going to be some savings Q1 21. And so, again, as I talk about, it's not a matter of if, it's a matter of when. If we should go with this particular proposal for Mr. Kane now, is that we prepare our reserve savings based on Q1 21 next year. So that's utilization savings, and go ahead and curb those dollars to put towards the future reserve. We know whenever we do it, we always will bank the previous month's premiums, and so that's $1 million. And then if we can do the Q1 21 savings, that could be up to close to another $1 million, which will create our reserve and then have us ready to make the budget decision of moving somewhere between $12 million to $15 million. I know that was a lot of numbers.
It is, but I think what you just stated, Mayor, is what was running through my mind, that we accept this desirable arrangement right now with the plan to start building the reserve, and the fact that surely by this time next year, COVID and the economy will be under some kind of control. We can be a little bit more specific in our planning.
Correct. Director Richardson, then Director Peck.
Thank you, Mr. Mayor. As Dean pointed out a minute ago, a lot of deaths we're having are not COVID-related. And I don't know how we quantify the value of a life. I know we had a number of numbers tossed around. And both Dean and Lance said we need to do a better job of helping our employees change their behaviors. And I think that hopefully from a policy standpoint, we can't divorce a change in behavior with the change in the communities that these people are raised in, and some of our employees are growing up in. For instance, a number of them in food deserts where we have a disproportionate number of convenience stores and liquor stores and places where people don't have options other than what's presented to them. Now, if you're thirsty and you had a glass of dirty water, you would drink that dirty water. But if you're thirsty and you had a glass of clean water, as opposed to that dirty water, you would drink the clean water. And I think from a policy standpoint, if we want to change behaviors, we need to change some of the conditions that some of our citizen employees are living under. And I think that's a natural fact that we need to look at from a policy standpoint as we redevelop parts of our community that are suffering from some of these health problems. In some parts of our community, we have the highest childhood obesity rate in the state. The highest childhood obesity rate in the state. That's because some of these people don't have options in the communities that they grow in. And I'll say it again, disproportionate number of convenience stores, liquor stores, and lack of healthy food options that make it more likely for them to have these kinds of health issues that we're experiencing. I don't know how we divorce those two, and I think that we need to figure out, I'm in a lot of numbers tossed around, but I don't know how you quantify the value of a life. And as Dean made a point earlier that a lot of these deaths are not COVID-related, and a lot of it is related to us improving behaviors. And improving behaviors is related to improving the conditions that some of our citizens and employees are living in. And I just think that that's a policy question or policy statement more than a question to our presenter, Mr. Mayor, or you or anyone else. This is my colleagues on the board as we look at redeveloping the rest of our city that are unfortunately been neglected and unfortunately don't have the healthy options that other parts of our city have. Large number of food deserts that we have to deal with in terms of trying to change behaviors. We need to change options that are available to some of our citizens in our city. That's all I have to have, Mayor. Thank you.
Thank you so much, Director Richardson. Director Peck.
Thank you, Mayor. And thanks to all my colleagues. Great questions. This is a very big and very important decision. And Mayor, I know it's absolutely true. It's not a matter of if, it's a matter of when. So Dean, just directly, I think I'm hearing that you support making this change now, or am I putting words in your mouth?
On balance, yes, I'd rather change, because I think as Gene said, money-wise, if you look at just pure calculations of money, it makes sense to take the $1 million. But as Doris has said, I have brought this point up a number of times, and sometime or another we have to bite the bullet and say, what's our responsibility to the people that we employ? And if we know we don't have a healthy population, then sometime or another we have to talk about whether what's our responsibility. And this is a real philosophical question, and we've got a little bit more time to think about it. But I really think that we're down to the point where we said we were going to do it 2 years ago. Last year we said we were going to get somebody on the side to help do it, and they're still out there with exactly what Ken said: diabetes, hypertension, overweight, and we're not drilling down on taking care of these people. And so it's a real hard decision to make, but that's where I am. I think that I'm going to have to come down on the side of the employees and how we take care of them. Now, if Frank says money-wise, we have to go the other way. You know, I'm not gonna stand in front of the train and say, do this. But sometime or another, we have to start taking into consideration, to me, what our responsibilities are to our employees. And it's just like the firemen. We put in fans in all the places to get rid of all the exhaust and everything to take care of the health of the firemen. I look at this the same way. We have the opportunity to do something that's different. We've not done anything different since I've been on this board. Our rates go up 7 to 10% each year, and we're no healthier than we were before, and we have 7 people who spend $1 million. And I would bet if you went back and look at them, they're not the healthiest 7 people in our group.
Thanks, Dean. I agree with you 100%. Thank you, Mayor.
Thank you. I don't think we have any more questions from the board.
I have another question, Mayor.
All right, Director Hines.
So, Mayor, and maybe this is a question for Sarah. When we made the budget amendments in 2019, I made a motion that was accepted and rider that any surplus funds over and above our ending budget for 2019 were to be put into reserves. So it seems to me that if I remember right, we finished 2019 with several $1 million surplus over and above our ending budget. So it seems to me that we should have those built-in reserves if we needed to access them for this program. So that's maybe something we can look at on the financial side, that being able to having to build up reserves, we should already have them.
To answer your question, we did when we made the budget cut in 2019. When we started that process, I believe sometime in May or so, April, and then passed it in June, created a budget cut somewhere around $5 million or so, which created a budget surplus long-term for $6 million. That $6 million was transitioned into our overall surplus, which helped first time ever that we had a surplus to contribute to the overall reserve account, which it took us somewhere around 13.1% net positive, something we haven't seen in quite some time. And I believe right now, when you take into account our restricted reserve plus the additional reserve, we're somewhere around $27 million. We do have some legislative requirements of what numbers we have to keep and kind of percentage we have to keep. I would not say right now we need to look at, because essentially what we're talking about when Director Compuris discusses taking the bite, that bite is roughly $5 million. And in this COVID-19 era, when we do have built-in reserves and not knowing what the future lies ahead, and particularly when you have economists are sharing that we may not reach pre-COVID-19 levels from an economic standpoint. Quite frankly, we're probably in an economic recession right now, that we won't reach that till somewhere around 2022. I don't think it would be advisable. Clearly, that's something before the board. But I think what you are hearing from Director Compuris and what you have heard from the Office of Executive Administration, it's our full intention, as it was January 1, 2020, to move towards a clinically integrated network. We just could not predict COVID-19. I think we do take advantage of this, what's due to us, and this $1 million, because it's clearly not a gift, and we just prepare through utilization savings of Q1 21 to prepare for the bite of having those dollars available to prepare for the reserve, as well as moving from what we generally average around $12 million from a budget standpoint to $15 million at a minimum, but understanding goes to a maximum of worst case scenario $18 million. I think from a budgeting standpoint, myself, Mr. Moore, and Sarah, we look at the 18, not the 15, because when you have 7 employees that made up close to $1 million worth of claims, we always have to look towards, and I have to say it in this way, we do have an aging population, and let's just say people have been slow to go to the hospital, and generally sometimes individuals, if they get ready to retire, will get as much stuff done before they retire. So we look at that $18 million, not the 15 minimum, just as fiscal stewards of the taxpayers' dollars. But again, I think it's not a matter if, it's a matter of when. We were originally planning to get to this. We couldn't predict COVID-19. But I think there's a financial plan in place to get us to the clinically integrated network for 2022 and have it in place, which will take, honestly, from what we understand, that there's even a 3 to 6 month period where you got to kind of get things ramped up from a wellness standpoint as well. So I think that is the plan that we would like to proceed. Clearly, this is a policy decision for the board. I think what you'll hear from Director Computers, he understands that bite of $5 million has a wide-ranging effect on other programs. I think we all are going to be looking very keenly at the budget on how we reallocate some certain things moving forward. That's kind of where we're headed as we're getting ready to prepare the budget. That's the reason why we wanted to have this here. One of the things I did want to share, as I look at some of my notes to provide some things back, I do think, and Director Computer is right, our consultant and works with UHC to have a wellness plan. We do have a wellness plan. The engagement from the employees, the employees have to, decide to do it, even though they're encouraged to do it from our health insurer. One of the things we have been talking about with Director Witherell and Ms. Jeannie Bradford, who's over our benefits division, and Mr. Moore and myself, is figuring out a way to bring on a wellness consultant that further motivates, do some additional things that UHC is not doing, just to continue to curb down that. So just kind of get those thoughts. Any further more questions, Director Hines? Director Hines?
No.
All right. I think, Mr. Kane, thank you so much for your time today. I do think there were a couple requests from Director Hines. I think if you would send Director Witherell just kind of a little bit more information, and I do know some of that information is proprietary from this AHN as it relates to other similarly situated organizations that they are providing the CIN. If you could provide as much information you can that's not proprietary to Director Witherell, and we'll get that to all of the board members to have that information on hand. And so, Director Hines, if you would just repeat exactly what you would like to see pending proprietary information. Director Hines?
Just some places where we've had clinically, can you hear me now?
Yes, sir.
Just some places where clinically integrated networks have been in place for several years, and kind of what their baseline was before the clinically integrated network and where they're at now. And I'm sure that we should have some track records in the 3 to 5 year range from what it sounds like. So whether or not they're here in the state, white paper study, any data that can be gathered, I'd just like a little more information on what the trends look like.
Yes, sir. Mr. Kane, if you could make sure we have that by Friday, if at all possible.
Yes, sir. Yes,
no pressure. I think you can figure it out. That being said, board members will now transition to the consent agenda. Board members, are there any questions for items 1 through 12? Before we go to Director Richardson, you had a comment?
Yes, Mayor, just briefly, I wanted to thank Mr. Kane for his informative presentation. Just thank him for providing us with the information that he's given us today. So I wanted to thank him before he left the room.
Mr. Kane, Director Richardson wanted
Thank you, Mr. Kane. We appreciate the. I want to thank you for your presentation and the information that you've given us and the parameters in which we have to work with. But most importantly, just thank you for your presentation today.
You're welcome, Director Richardson. Thank you.
Mayor,
Director Wright.
you said items 1 through
12.
I guess it was just the golf course that we closed. So Hyman is still being used quite a bit.
Yes, ma'am.
Okay. That's kind of off the beaten track for me, so that's one of the questions I had. Mayor, this is all relating to parks, and I do have some questions about some other parks in Ward 6. And there was one on here where you mentioned it's going to be Creek Greenway. You said location in Ward 6 and 7. How is that in 7?
Yes, ma'am. The Creek Greenway is what we've presented in the past, as well as the group that was put together by the Mayor's Task Force. It's a trail that's going to come from War Memorial, basically, and go all the way down through Boyle Park, Canis Park, through Western Hills, into Hyman, and over to Brody
it's going
Creek.
that way. Okay, I guess I'm thinking the wrong one. The last one I remember you talking to me about was off of Markham, so it's not that.
No, ma'am. This is
Okay.
be connecting War Memorial to Hyman, basically.
Okay. Can I get a diagram of what that's going to look like?
Yes, ma'am. I believe it was.
I mean,
it
of
should
the
be in-
location,
Yes, ma'am. We can get that to you.
because with the pandemic and people being cooped up and stuff, people want to get out and into Boyle. I know I've had some people ask me if our facilities were open and they wanted to go in there and walk and stuff. And I told them, best of my knowledge, they are.
That's correct. They are.
And I did get a question about Boyle. There was something going on with one of the pavilions. I know we had gotten a grant that you're supposed to be.
Yes, ma'am. That project was completed probably about a month ago. It is a heritage grant, and it's about $85,000 total project to provide ADA access. There was some cobblestone pavers that were unlevel over the years, and this project leveled it and provided ADA access to the parking lot.
And did you replace the playground equipment?
We have not replaced any playground equipment recently, no.
That's
no,
what the lady was asking me about.
There is some playground equipment that we're going to remove that is old
Yes.
near Pavilion number 3. That is
I
correct.
think if you remove it, maybe they'll quit fussing at me about it, because it's so old.
Yes, ma'am.
What about Union Park?
We've got the slab ready for the pavilion. The pavilion should be delivered next week. So that is in progress and should be completed in the next few weeks.
Wondering, because it seemed like it stopped for a long, long time, and now I thought I saw the new pad out there. Okay. Mr. Moore, I'll be submitting some requests for a few improvements for some parks, and you can tell me one way or the other. That's it, Mayor.
Vice Mayor Wyrick.
Thank you, Mayor. Item number 5. Originally, we had, I don't know, a couple of years ago, a project to build a restroom there that was a unisex restroom. And so the neighborhood decided that they wanted a boys and girls restroom. Does this $125,000 take care of the boys and girls?
Yes.
Just checking. Okay, and the other part of that is that's located in Ward 7 instead of Ward 2. Now, my question is also, you say you're moving the location, I guess, up close to the pavilion, and that's going to keep it out of the flood area? Is that what we're doing?
It'll bring it out of the floodway, which was where the old restroom was located. So it'll definitely bring it out of the floodway, and it'll bring it more convenient to the playground and the pavilion area.
Okay. And then on the Western Hills Park, that's also in Ward 7, and this is a contract for McClellan to go in and build a master plan?
So this is to design the project. There is another resolution here to actually purchase the pavilion and the playground to get that piece of the project going. But the McClellan piece is to design the remainder of the project, which would be site design, fishing piers, trail, ADA access, parking, lighting, all that.
Yeah, okay. So, I was a little bit confused because I thought we already had a master plan for Western Hills, and So what is McClellan going to do one more time?
We do. This is to develop the construction documents for that, to do the surveys, to do the physical design of the piers, to do the ADA access, to design the parking lots. We have the conceptual design. We don't have the actual construction documents. And that's what this will provide us.
Okay. All right. And so we've had neighborhood folks that have been working on this, and so they're in concert with the plans that we have.
Yes, ma'am. This has been a long process, as you know, and we've had numerous meetings with the neighborhood association, with people in the neighborhood, and they're in full support of the project and of the conceptual master plan that we had come up with.
Okay. The conceptual master plan was passive recreation.
The majority of this park will be passive recreation with, obviously, the playground amenity, the pavilion, fishing piers, and trails.
Trails, okay. No huge baseball park or soccer fields or anything like that is in this plan?
No, ma'am.
Vice Mayor Wyrick, you've been a long-term advocate for many of these projects, and I want to assure you, one of the things you sat me down early on and said certain things that you sure did at a Starbucks location that would be undisclosed.
Oh, okay.
You sat me down and you gave me a list, and Mr. Moore and I visited, and Mr. John Eckert. And I just want to take time now just to recognize both John Eckert and Mr. Moore for their due diligence, because you and Director Adcock were really great advocates in this, and we sat down and was able to get this done. But it's really a testament to the team and to the park staff and Mr. Moore in figuring out how to get all this done. Is I think Director Adcock said it took us 16 months, but I've only been in office 19 months, so I think that's pretty good. But this is really, again, kudos to John Eckert and the park staff and Mr. Moore for getting this done, and to you all for being great advocates. But to answer your question, everything that you asked for, that hasn't been strayed away.
Okay, very good. Well, there's some other things on that list. Are you working on them?
Well, we weren't supposed to disclose that entire list, but yeah.
Okay, just checking. Thank you. I just want to make sure that the neighborhood is getting what they requested. And there's always rumors of this and that and something else. I just wanted to make sure that we were doing what they had asked for. Thank you.
No problem. Those in wards 2 and 7, all the things with wards 2 and 7 definitely have been accomplished, and also Director Richardson has been a great advocate as well. And you're right. Ward 1 with Crump Park. I don't think we didn't even talk about that, Director Hendricks, with Crump Park renovations.
I feel left out.
Oh. Any more questions for board members from 1 through 12?
I've got.
Director Adcock, Director Richardson, then Director Pack. Director.
Okay.
Yeah, we already recognize you.
Director Wyrick, you let him off too easy. You didn't mention the fishing pond at Cloverdale, at Ottenheimer. So, Mr. Moore, the fishing pond at Ottenheimer.
I got a picture last week from John. If you go over there, they're beginning work. It's John, go.
Yeah, absolutely. It's we're finally there, Director Adcock. There's a bulldozer in the bottom of that pushing dirt around as we speak. Well, there was earlier today, but we're making great progress on it, and it's going to take a lot of moving of dirt, but we're working on it hard, and we're going to get it done soon.
Right. And when is the fishing tournament going to be?
A great question. We're going to work on that.
Okay, the next one is the basketball court at the Southwest Community Center. They tell me that the young people can't bounce basketballs on the court because it's got so many humps in it, it's wore completely out. What are the plans for the basketball court?
Yes, ma'am. I do have, that's part of my budgeted items for early 2021 to get repaired and refinished was that basketball court as well as Dunbar.
Okay, and then also Wakefield in number 6, what are you going to do in Wakefield?
The proposal here is to, with this grant that we're going to apply for, is to replace the playground as well as renovate the tennis court.
Okay, and then the second tennis court on East Little Rock at the community center. Have you got any plans for doing that?
We have not gotten there yet. No, ma'am.
Okay, I'd like for you to add that to your list.
Yep.
I think you'll find the directors are all very concerned about their parks, Mayor. Thank you very much, John. And
yes, ma'am.
thank you for the restrooms at Hyman, Mayor and Mr. Moore and Mr. John.
You're welcome.
Our pleasure. Our pleasure. I think we had Director Richardson, then Director Peck, then Director Wright.
Yes, thank you, Mayor. My question won't be project specific or Ward specific, even though Ward 2 has been mentioned a couple of times. John, what mechanism are we utilizing to assess and prioritize our improvements currently?
That's a great question, Director Richardson. As you know, we got an very aged park system, so there's a lot of projects out there, and we have a lot of parks. We have 63 parks and numerous 7 community centers, so there's a lot of things to do. There's several items that we look at. Safety is number 1, ADA is number 2, and we look at usability, functionality, all those things as well.
Are those assessments done internally?
Yes, sir. We do have a safety coordinator who has done a great job of going out and assessing all of our parks and our playgrounds and our facilities and really making levels of tiered safety issues, and we try to really be aggressive on attacking those.
And we use that assessment to prioritize the needs or prioritize the improvements that we're making?
That does play into it, yes, ma'am. Yes, sir.
And how much does funding play into it as well? The availability of funding to make these improvements?
Obviously, we have the funds that we are given, and we try to be as aggressive. We apply for grants to help stretch those dollars. So we try to do our best, definitely.
Thank you.
Director Peck.
Thank you. I'll be very brief. John, I just wanted to commend you and your staff. I know that parks are being used more than ever during the pandemic, and I get so many positive responses, and as a user of many different ones, we're lucky to have them. Do you have any idea what the increase in park usage has been the last few months? I know some specifics, like kayak rentals and things like that at Two Rivers, but it seems like people are out in parks more than ever before.
Yeah, I think that's indisputable. COVID-19 has really pushed people outside even more this year, so we don't have any statistics. We have seen some Google heat maps and some Strava type data that shows a lot more people, but we don't have any trail counter statistics at this point, really.
Good job. I love our parks.
Thank you.
Thanks.
Director Wright.
Thank you, Mayor. Since we are on parks, I might as well go ahead and put these out there. I'll go in order that I have them listed here. This coincides, Mayor, with what Director Richardson was saying about our population being unhealthy. Long before Mr. Eckert got here, we'd come up with the Union Park Improvement Plan, and Mr. Moore, I don't know if you recall, but that called for an interior walking trail right there at 36 and Walker. That is a very diverse area. It gets a lot of people living in there, kids, and the ball field there is used for practice, but I would like to, the plan had been to have an area for adults to walk and get exercise, because there is no other walkable area. Okay, and that's at 36 and Walker, Mr. Eckhart. And Kiwanis Park, as you know, the gates have been locked for several years now. The lady that was doing most of the complaining about the issues over there I think she sold her house and she moved. However, I have an opportunity for a partnership with LRPD, our new community officers would like to partner with the community center and host a fishing derby at Kiwanis Park, but I don't know what the condition of the pond is. So I would like an assessment of that and to get back on the schedule with Game and Fish to have it stocked again. As I understand it, they stopped stocking that once the gate got locked. And the officers that I'm partnering with, Crace and Croson and Phillips, have said that they would take responsibility, Mr. Moore, for locking the gate in the evening because they are over there working. They're working all over the area. So they said they would agree to do that. But they would like to be able to host that annual fishing derby in Kiwanis Park. But we need an assessment as to the condition and what's going on in there. Also on 36th Street, leading up to Union Park, there is a bridge, of course, and as I shared with you, Mr. Moore, I guess Little Rock Water Reclamation is putting a bench out there for people to be able to sit, and as I understand it, they're ordering those through parks using you all's vendor. Is there any way we can dress that area up? It is a gateway into the neighborhood, and have Public Works look at the railings on that bridge to kind of fix that up. That is our historic park. It was built at the same time as Boyle in 1936. And the pavilion, the reason I wanted to save that structure, as much of it as possible, because of the history that was there. And that was built at the time when the parks were segregated. And we were supposed to have a plaque put up commemorating that fact. So I did not want us to lose sight that there was a full plan, and I believe Ron Ross and maybe Leland worked on that project, so they may have that in their archives. It's been a few years ago. And my last question is, if we wanted to name one of the ball fields at West Central after one of our citizens that has passed on, is there a formal procedure, Mr. Moore, Mr. Eckert, or Mr. Carpenter, that we would have to go through?
I believe it's just sort of a kind of make the Park Commission aware, but then it's more of a staff.
That's what I thought, maybe the commission. Well, our good friend Dixon Flake passed, and what people don't know is that the first time I received the keys to that park and walked through the gates, he was with me. He really took an interest in that area of our city and with the kids, and was very much concerned about them having a place to play and to be in a safe atmosphere. So his family would like Mr. Moore to contribute to the project of getting that field fixed up, and Field 1 is what we were looking at, and dedicating that in his honor and his memory. I don't know when the Parks Commission is going to get together again, John, but I would like that to be on the agenda for discussion.
Yes, ma'am.
All right, thank you.
Any questions for items 13 through 14? Director Hendricks?
Yes, Mayor.
Yes, Director Hendricks.
Can you hear me?
Yes, ma'am.
You can hear me?
Yes, yes, ma'am.
The question is for Mr. Moore and possibly Eckhart. I have many of the men that do the tennis up in Dunbar Community Center. Is it possible that we could get another tennis set up there? They're having to stand in line until whoever gets there first and that kind of thing. So take a look at that. Adding additional tennis rackets at Dunbar Community Center. Thank you.
Yes, ma'am. Thank you. Director Hines?
Yes, Mayor, on item 14, staff may just need to clarify. When I Google 16801 Chenal Parkway, that comes up as the promenade at Chenal, and the description of this property is the southwest corner of Chenal Parkway and Candace Road, which I'm assuming is the Costco site. Or maybe Google's wrong. I just wanted to clarify that we've got the right address and legal description of that piece of property. If something's not matching up on my first Google of that, because I was wanting to make sure I understood where that piece of property was. And if you look, Chenal Parkway and Canis, the southwest corner would be the future Costco site, but 16801 showing the promenade at Chenal, which is further west, northwest on Chenal Parkway.
All right. Thank you so much. Director Collins, did you?
Mayor, members of the board, Director Hines, you are correct. That is the Costco site. That is the location where, in the past, the board had approved abandonment of the right-of-way, which was at that time, it was prior to Canis Road being realigned to turn around and hit Chenal at a 90. A easement was retained. Since then, the utilities, some of the utilities have been moved, and the utilities approved of this abandonment for this easement. So that is the location. We will confirm that address on there. The legal description, we did compare that with what they presented us. That is correct, but we will look at that address to confirm that.
Thank you, Jamie. Appreciate it.
All right. Any more? Make sure we got everyone. I think we got all the directors. Any more questions from directors? All right. We'll have on September the 1st, just make everyone, we'll have our second quarter financial report on September the 1st rather. Any questions from board members or announcements? Seeing none, this meeting is adjourned.